Assalamu alaikum friends, welcome to day 7 of Audit and Assurance revision crash, and today we are going to cover evidence. But before we start today, let me make an announcement for AAA. This is for the AAA students. They have been requesting me when will I upload my day 2 and day 3 of AAA revision crash. I have already uploaded day 1, but due to some other commitments there was a delay. That's why I want to make this announcement that AAA Day 2 will be released on 27th of August and Day 3 will be released on 31st of August. So let's start today's topic, evidence. The topics that we are going to cover today are the types of audit evidence, audit procedures, assertions, computer assisted audit techniques, and sampling, relying on the work of others. Audit evidence. Audit evidence needs to have two characteristics. It should be sufficient and it should be appropriate. If one is missing, then you cannot use it as an audit evidence. It should be both sufficient as well as appropriate. Sufficient means the quantity wise, okay, and appropriate means the quality. The quantity should be sufficient enough. You cannot use too less. Okay, when you're using audit evidence, it cannot be too less. The amount cannot be too less. And when it comes to quality, you have to make sure that you're using the good quality evidence. Okay, not all the evidences are considered good quality. So it should be sufficient and appropriate. To draw on the conclusions, to give an audit opinion, you need appropriate as well as sufficient audit evidence. Then, sufficient audit evidences are affected by risk, materiality, and reliability. What does it mean? That means if in your audit area there are some areas which are very risky, for that you have to increase your quantity. You need more quantity of audit evidence in that field. You have to increase your number of evidence. Materiality. If the item is very material, you need more quantity. Reliable. Okay. You have to collect the amount of evidence up to an amount where you feel that it's reliable now. Okay, it becomes reliable. Coming to the quality, quality is more about reliable. It has to be reliable sort of evidence, and it has to be relevant to the financial statements assertions. For example, if you are saying that the sale is completed, right, the sale have existed on this date, it's an assertion that you're making on sales. So for that, what type of evidence are you using? The quality. So it depends. Now let us go to the types of audit evidence. There are some types of audit evidence where you can place more reliance and some types of audit evidence where you cannot place more reliance. So on your left you can see the examples of audit evidences which are not considered so reliable. Okay. When you're obtaining anything inside the entity, it is considered to be less reliable. Right? Because managers can easily lie. It's their business. They can easily give you wrong information or wrong evidences. They can lie. Okay, so it's less reliable. But external sources, independent sources from outside the entity are considered more reliable. Next, obtained indirectly. If you are getting an evidence indirectly, it is considered less reliable compared to when the auditor, he himself is obtaining it directly. He himself is asking the manager. He himself is collecting the confirmation letter from the customer or the bank letter or whatever it is. Oral representation are considered less reliable, but when something is in a form of a documentation, it is considered more reliable. You can trust on that more. Because oral, come on, no one is 100% honest. Anyone can lie. But when something is written in the document, you have no scope of lying or cheating or manipulating anything. It must have done, that's why it's there in the documents. Photocopy of a document also considered less reliable, but original document are considered more reliable. Okay. Now, substantive procedure. This type of procedures are designed to detect what material misstatement at an assertion level. We'll go to assertion level a bit later. What is assertion and all? What are the types of assertion and all? And can be test of details as well or analytical procedure. Okay, substantive procedure can be test of detail or analytical procedure. Now, test of control. What is test of control? You are testing the effectiveness of the internal control system. to prevent, detect, or correct material misstatement at an assertion level. Now let us go to the audit procedures. These are some of the audit procedures, and you need to know all those audit procedures. But when you're writing this in the answer, please make sure you have to link this to the scenario. You have to be specific to the scenario that you have been given in the exam. You just cannot use general audit procedure that is given on this list. Okay. For example, observation, right? Observation might not be a good audit procedure in the scenario that you have been given in the exam. So you cannot write observation. Because most of the students, what do? They only write this audit procedures. Check whether this is correct or not. Review whether this is correct or not. Check, review. These are the words they always keep repeating. Okay. So don't repeat. Make sure that you know the meaning of each audit procedure. They are different from each other. First one is, okay. The first one is inspection of records or documents. So the word is inspect. Inspection. You are inspecting. How does this help you? This gives you direct evidence whether an assist exists or not, whether an assist is owned by you or not, whether the control is operating or not, whatever the cutoff, are you recording the sales in the correct period or not. So through inspecting documents and records, it will give you access to this kind of information. Second, inspection of tangible assets. This will give you information about the existence, whether that asset exists or not. Also the value, it may give you evidence of the valuation also. Okay, whether it is correctly valued or not, the asset. Third, observation. Observation means you are observing the process, the internal control, everything, whether control is being operated or not, whether the work is separated or not. Inquiry. What is inquiry? Inquiry is, this is a major source of audit evidence. Most of the time, the auditors use this audit procedures only compared to the other inquiry. But remember, this needs to be corroborated with other audit procedure. You just cannot entirely use inquiry only. You have to use other sources as well, other audit procedure. Then we have confirmation. This is you are confirming with a balance or representation that is made by the management. And mostly this confirmation comes from directly from an external third party. So this is considered more reliable source of evidence. For example, if you want to get confirmation regarding your receivable balance, you will go and ask the customer and confirm with the customer, are they confirming or not. Recalculation. Very easy. Auditors recalculate the amount that is given to them to check whether it is arithmetically accurate or not. They are checking their calculation with the client's calculation. Reperformance. Reperformance means you are checking out, you are reconciling the figure. Okay. For example, you are checking the accounting procedures and all. You are reperforming those accounting procedures and all. Reperformance and recalculation are different. Okay. Recalculation is basically on calculation, the numbers you are checking, the accuracy, that's it. Reperformance could be that you are performing accounting procedures and seeing you're performing the audit procedures again and checking the result with the client's result. Okay. Analytical procedure. Analytical procedure is like you're finding a set of trend or relationship or variances you are trying to find out. For example, you are finding sale ratio, operating profit margin or gross profit margin. What does this tell you? This you can compare with the last year and see. Also, you can check with your competitors. What is the usual range? Is the range changing very drastically? Is the trend? You can analyze the trend and see. So if there is any unusual variance or unusual trend, suddenly there's an increase in sales or suddenly there's a decline in uh, liability, you can check. You can easily identify through that any fraud or error. That's not an indication that a fraud and error has definitely happened, but at least it will give an indication beforehand, right? By doing this analytical procedure. Mostly it's like you're calculating ratios, okay? And you're comparing this. This also you need to collaborate with other forms of test, the results of analytical review. You cannot use the results of analytical review in isolation. Okay, you have to do other forms of test as well, because the ratios which you are using, the ratios you are calculating based on the numbers, those numbers can be wrong. So you need to check first whether those number is correct or not. So for that you have to do other forms of test as well. Okay, now let us go to the assertions. What are the types of assertions and all? Remember, management is responsible for preparing financial statements, which gives true and fair value. It is not the auditor. Auditor does not prepare financial statements. It is a manager. Auditors just come and audit. Okay, and for each item in the financial statements, managements are making assertions. It is the management who are making these assertions, not the auditor. Auditor checks whether it is correct or not. That is auditor's responsibility. In your profit and loss account, whatever the items, it is known as transaction and events. Okay, so this are the 6 assertions in your statement of profit and loss item balances. The items, whether it is sales, whether it is purchases, whether it is expenses, it comes under transaction and events. Okay, so number 1, occurrence. Management say that the sale has occurred. You have to check whether the sale has actually occurred or not. How are you going to check that? By seeing the source document, you are going to check all those things. Okay, completeness, whether a transaction has been completed or not. Is it recorded in the correct places, in all the places at the same time? Accuracy, is it accurate? Cut off, are you correctly cutting off? That means, are you correctly recording it in the time, the actual time, or you are postponing it to the next year? For example, the profit, are you taking the profit and taking it to the next year so that you can get the bonuses? You're trying to shift the profit every year so that every year you get bonus, right? You're manipulating. Classification, how do you classify? For example, for intangible assets, some of the research costs which are expenses, you might classify them as intangible assets. Hence your expenses goes up, value of the asset goes up, right? So auditors will come and check, did you correctly classify it or not? Presentation, how did you present it? So these are the 6 assertions relating to the profit and loss account, right? Items in the profit and loss account. Now we are coming to the statement of financial position, that is known as account balances. Okay, these items are known as account balances, whether it is your receivable, your payable, your loan, your non-current asset, your intangible assets, your whatever, everything. Okay, these are the assertions relating to it. Number 1, existence. We don't have occurrence for it, we have existence. Whether your assets, non-current asset, is it existing at the year end, or you're just writing it? Your stock, is it existing? Rights and obligation, you're checking the rights and obligation. Do you have the right to that asset? Do you have the obligation for that loan? Completeness we have for both. Okay, account balances as well as transaction and eventness. Accuracy, valuation and allocation, 3 things. For example, you are taking property, plant and equipment. Is it accurate? Is it valued correctly? Did you use fair value model? If you use fair value model, did you value it correctly? And allocation, how did you allocate it? Classification comes in both. Here also classification comes. Presentation also comes. So 3 things are repeated in both the places: completeness, classification and presentation. Okay, accuracy is also there, but with accuracy for the account balances there is 2 more things, which is valuation and allocation. Okay, but in both it is 6. So that shall make you easy for you to remember. You just need to remember that there are 6 under both. Okay, now let us go to the analytical procedure as substantive procedure. When you have to use the analytical procedure as a substantive procedure, but there are some conditions. It's not all the time that you have to do analytical procedure as substantive procedure. Substantive procedure means in detail you are using now the analytical procedures to find the trend and all. So whether this is suitable or not, it depends. Okay, depends on certain things. Number 1, the assertions being tested. It depends on the assertion that you are testing. For example, may be good for valuation but bad for existence. For example, when you're valuing a non-current asset, let's say, okay, You want to see, you want to test whether the non-current asset has been valued correctly or not. Okay, forget about non-current asset. Let us go to the stock. Whether stock has been valued correctly or not. That's what you wanted to test, right? So stock valuation, okay. Through analytical procedure, stock valuation you can find out, maybe, but you cannot prove that it is that it existed or not. The stock existed or not. It could be bad for that, because analytical procedures, they just check the trend. Okay, they will not say whether it is existing or not. They cannot check that. They have limitations. Then reliability of the data, how reliable your data is. If your controls are weak, you cannot use this as a substantive procedure. That means analytical procedure, finding ratios, finding the trend and all, finding relationships among the variables. You cannot use this as a substantive procedure when your controls are weak. Because if your controls are weak, the numbers that you're using on which you're calculating this analytical procedure will be wrong. So unsuitable. If your data is more reliable, then you can use it. The degree of precision possible. What does it mean? This is more suited to regular transactions than one-off item. Why? Because for regular transactions you can find the trend, but for a one-off item you cannot find the trend. It just happened once. How will you know? How will you be able to find out or identify any unusual trend? Because it's just one-off item. So that matters. Okay. Then amount of variation which is acceptable. Some numbers in financials require greater accuracy than others. Not everything requires at a great amount. Some require more accuracy than others. But that does not mean that others you can leave it. Everything has to be accurate up to the maximum that you can. But some require more accuracy than others because they are very material. For example, one example is sales, your revenue. This has to be very accurate because a lot of the fraud and a lot of the manipulation are done through sales by charging sale in the wrong accounting period, or uh, overstating sales revenue, right? You have not yet received from your customers, but you are recognizing it as a revenue. You might have some dummy customer and saying that this is a revenue. You might increase your revenue. Why? To increase profit, to get bonus. So revenue is one example. There are so many other examples, but revenue is one of the uh, best example for this situation. So that means for revenue, you cannot use analytical procedure as a substantive procedure. Okay. Next, computer assisted audit techniques. There are two things that you need to take care of. One is test data, the other one is audit software. Test data, what do they do? Test data is data that is generated by the auditor, which is then processed using the client's computer system. This is not the actual data. This is just their testing. It's like a dummy that they are using. Okay. It's like a prototype that they are using, not the actual data. They are not working on the actual data. Okay. They are putting some imaginary figures and all, right? Testing in the client's computer system. So that is known as test data. And audit software. Software which is designed specially for the audit purposes. Okay, there are some softwares that are designed. Next, test data. What should test data do? So test data is basically you are putting a dummy data. Okay, it's not a real data, just dummy data. You are just faking it out just to see whether the controls are working or not, whether they are operating or not. Then valid data should be accepted. If the data is valid, accept. If the data is not valid, don't accept. It's rejected. Okay, you should make sure that you try to put incorrect numbers and see. For example, the range. You might put some number which might not be in that range. You should get that message where they say it's error or it's not within this range. If it's not, if you see that if you are putting some incorrect format type or incorrect in the range, for example, the cell is formatted in such a way that you can only enter from 0 to 100. If you are putting 101, it should show you an incorrect message. It should not accept. But if it's accepting, that means you have to change. Okay, that means your system is not working properly. Coming to the audit software, what should it what should they do? Okay, so mainly this is used for three things. Number one, selecting sample. This can be used to select sample. Number two, because softwares and all, they are much faster than you selecting sample randomly. Okay. Second, checking computations and calculations. Easily you can check the calculation, right? Time is saved, also your energy is saved. Then comparing two or more different files, you can easily compare. Then we have performing detailed analytical review, for example ratios and all. If you want to calculate any detailed ratio, easily you can calculate, and multiple ratios you can calculate in a short span of time. So these are the some advantages of software. Okay, now considerations affecting use. When you are using this computer assisted audit techniques, you have to give considerations to this area. Number one, audit team should have the knowledge of the computer. Okay, then number two, cost benefit analysis. This is costly, not everyone can afford, so you have to check cost benefit analysis, do and check whether it is more beneficial than cost or the cost is more than benefit. Time available, do you have the time? Because CAAT, that is a short form of computer assisted audit techniques, it takes a long time to set up. Now let us move on to the sampling. Okay, so sampling means you are not putting each and every transactions. Auditors cannot check each and every transactions. Okay, it's a myth that people believe, the general public believe, that auditors role is to check each and every item, each and every transactions. No, it's not true. They are only testing on a sample. Okay, it could be for class of transactions, that means the profit and loss account items, or account balance, the balance sheet items, but they are taking a sample only. 100% they cannot check. Okay, so each of it has a chance of selection in the sample. Okay, now audit sampling is usually preferable to testing all items. So these are the advantages why you should go for audit sampling. Number one, come on, it's very expensive to test each and everything, right? And also time consuming. Remember, if you have 10,000, 20,000 of transactions, how on the earth are you going to go and test all the thing? Okay, can you finish it in the audit period? If the audit period is for 3 months, you cannot check all the transactions, 10,000, 20,000 transactions in the 3 months. You definitely need a longer time. Okay, and by the time you test all the thing, it will be outdated. So it's expensive as well as time consuming. Number two, users of the financial statements, they just want a reasonable assurance, they don't want 100% accuracy, so you can use sample. Third, full substantive testing of the accounting record will not verify that all transactions are recorded. You might have omitted some things. Okay, if you're doing a full testing on all the transactions, it does not mean all the transactions are recorded. You might hide some transactions, you might not record. Okay, it does not prove completeness. You cannot prove the completeness assertion through testing each and everything. So in this case, sampling is considered more useful. Now, but audit sampling you cannot use for each and everything. Some situations you cannot use audit sampling. It might not be appropriate if, number one, population is small. If your population is very small, then definitely a sample will be even smaller. So there is no need. You can take the whole population rather than taking sample. Then all transactions in a particular area are of a great monetary significance, right? If the amount, if in a particular area only, not all the areas, you see the transactions they are of a high monetary value, you cannot use audit sampling for that area. You need to check each and everything because the monetary value is high. Third, population is non-homogeneous. Non-homogeneous means they are not identical. Everyone is different. So in that case, sampling will not be a good thing. You cannot do audit sampling. Now let us move on to designing the sample. How do you design the sample? When you design the sample, auditor must decide whether they are going to go by statistical sampling or non-statistical sampling. Okay, statistical sampling means everyone has a chance of getting selected. It's like a randomly you're selecting, random selection. Non-statisticals are the all the other types of sampling which is not statistical. Okay, now selecting the sample. So when you're selecting the sample, one is statistical sampling, we know. It is random selection. Okay, you are randomly selecting. You can use your computer also for that. For example, through Excel, you can use this random number table in Excel. You can use it and find out. Okay. Second is non-statistical sampling. In non-statistical sampling, auditors have to use judgment. What are the items that they are going to put in their sample? Okay. It is not random selection. Now, evaluating the sample result. You have designed an excellent sample. You have selected the sample also, whether statistical or non-statistical. Now you have to evaluate the result, because it's of no advantage if you don't evaluate the sample result. So how do you evaluate the sample result? The auditor carries out audit procedure on each item that is selected and documents the results. Audit procedures means all the list which I've given you before, that table, right? Review, inspect, observe, recalculation, reperformance, analytical procedure, all those things now you are doing on the all the items that is selected in the sample. And then you are documenting the results also. What is the result? Errors identified in the sample are then projected across the population as a whole. So if you identify that there's an error in the sample, you are concluding that in the population also this is the error. Now, sampling method. There are some sampling methods that you need to know. Number one, random. Okay. Number two, haphazard. It's in a, there is not a proper way. Okay. Monetary unit sampling, systematic, and block. The definition of each of this is given in your textbook, so you can go to the textbook and see their features and all. Now, relying on the work of others. So when you're relying on the work of others, use of auditor's expert. There are two people you might need to rely. One is internal audit, the other one is auditor's expert. You are hiring an expert. Okay, so when you're using an auditor's expert, remember, auditors cannot delegate responsibility to expert. It is your responsibility. Even though you are using an expert, the auditor, he himself is using an expert for certain area. He cannot delegate responsibility to expert. He will just be taking advice, just guidance from the expert. But responsibility, auditors cannot delegate to expert. Okay. Even though when you are relying on the work of others. Number two, examples include such as surveyors, valuers, expert inventory counters, or actuaries if you are using. Okay. These are some examples of experts. Auditor is still responsible. Okay. Even if you're relying on the work of others, whether expert or internal audit, remember, auditors still have the same responsibility. They still have to obtain sufficient as well as appropriate audit evidence. They cannot use the work of others entirely for the audit process. Only partially they can use, okay, for some part. Then, experts must be independent. Those experts that you are using, the auditors, they must be independent, they must be objective, they must be competent enough for that work and experienced also. See, experts and all, not everyone can be expert. There are only few limited people who are experts. Okay? You need lots of experience. Okay? So that's why when you're hiring expert, when you're using expert, auditors have to make sure, are they independent? Do they have the experience? Are they competent enough in the field that you are auditing? Unmodified audit reports do not refer to the use of expert. So when you're writing an audit opinion, remember, you are not making use of the expert there. Okay, you cannot say I'm making the use of expert, hence unmodified audit opinion. No, it does not refer to the use of expert. Use of expert is for your own guidance or your own satisfaction that you're using. In case you got stuck somewhere, you're not able to understand a way out, then you are calling out an expert, taking his advice. But still, you have to do your work. You have to find out other evidences as well. Before work is performed by expert, these are the things that you need to do. Expert still didn't perform the work. So what is it? Agree the nature, scope, and the objective. You have to agree. The auditor have to agree this with the expert. What is the nature? What is their scope? What is their objective? Agree the roles and responsibilities. What will be the roles and responsibilities of the auditor? What will be the roles and responsibilities of the expert? They will agree this beforehand, before the expert comes and starts doing their work. Nature, timing, and extent of the communication. How will they communicate? How much will they communicate? Agree the need for the expert to observe confidentiality. Okay, you have to keep this confidential. Anything which is being shared among you and the expert needs to be confidential. You cannot share it. Okay, neither expert can share it with anyone else. Evaluating the work of an expert. This is after the expert has performed their work. Now you have to evaluate. You cannot closely just whatever they say rely. You have to do your own evaluation on the work of an expert. Okay, you means I'm referring to the auditor. You means you are the auditor. Okay, relevance and reasonableness of finding. When they give you their findings, their conclusion, you have to see whether it is relevant or whether it is reasonable. If it is relevant and reasonable, you think it's reasonable and relevant according to you also, you can go ahead. Otherwise, you need to challenge them. Okay, next, assumptions. Relevance and reasonableness of assumptions. Assumptions means the expert's assumption. Is it relevant? Is it reasonable? You need to see that. Relevance, completeness, and accuracy of source data. What is the source data that the experts are using? It is relevant? Is it complete? Is it accurate? Now we are coming. So this is for the expert, okay, when you're using an expert. Now let us come to the internal audit. Because external auditor needs to rely on the work of internal audit also at some point of time. So using the work of internal audit, external auditor may wish, okay, it is not compulsory that they have to rely on the work of internal audit. No one says at gunpoint no. It's the external auditors wish if they want to rely. Why? Because if they rely on the internal audit, it will reduce the amount of detailed testing that external auditor has to do later on. So that could be a reason. Next, same way how we have done for the experts, we have to assess the internal audit function now. So before any reliance is made, you have to assess the internal audit function. Before even they have performed their work, before even you have relied on them. In terms of what? In terms of the organizational status. What is the organizational status? Scope of function. Are they a scope broad or very limited? Technical competence. Internal auditor, do they have the technical competence? Due professional care. Are they performing the due professional care? Now, let us go to assessing the internal audit work. This is after the internal audit. You have relied on the internal auditor's work. Okay, you have to assess their work. Okay, so when the external auditor, they intend to use the specific work of internal audit, here also they have to perform audit procedures on that work. Okay. 2, confirm its adequacy for auditing purposes. You just cannot take it for the auditing purpose and start auditing. You have to see whether it is adequate or not for your auditing purpose. Then, sufficient appropriate evidence obtained. Okay, after the internal auditor's work, is it giving you sufficient appropriate evidence? If it's giving you, you can rely. Go ahead. Conclusions are valid. Internal auditor's conclusions are valid. You need to check. Then, work has been properly supervised and reviewed. Internal audit, when they are working, their work, was it supervised? Was it reviewed? If it was supervised and reviewed, external auditor can use it. Now let us go to the internal audit to provide direct assistance, okay, where they are providing direct assistance to the external auditor. So they can provide direct assistance, right? Internal audit can provide direct assistance to external auditor, but under their supervision and review. It should be supervised and reviewed by the external auditor. Next, if this is not provided by laws, you cannot provide such assistance, okay? If the law says that internal audit cannot directly assist the external auditor, if it is prohibited under the law, then you cannot. External auditor cannot take the direct assistance of the internal auditor. Competence and the objectivity of the internal auditor must be considered whenever they are providing a direct assistance. Are they competent enough? Do they have the objective? Okay. And they must not do work which involves significant judgment. For example, where there is an area, okay, in audit, where you require significant judgment in that area. For example, financial instruments, IFRS 9. of valuation of intangible assets. This area requires significant judgment. You cannot use directly tell the internal auditor to help you out in those areas. Also, where there's a high risk of material misstatement, external auditor cannot take the direct help of internal auditor. Then, planned work must be communicated with those charged with governance. If you are taking the direct help of internal audit, this must be communicated to those charged with governance. Those charged with governance means your audit committee, non-executive directors, and all those things. Okay. Cannot make excessive use of internal auditor. You cannot use internal auditors help excessively. That means 90% of your audit you are taking the help of internal auditor. It should not be like that. Maybe you can use 5% or 10%, but not excessively. Okay. Management must not intervene in that work. Management cannot intervene in the work of that. The direct assistance that internal auditor is given to external auditor. Then, internal auditor must keep the external auditor's information confidential. External auditor will be providing direct supervision, direction and review to the internal auditor's work. They are directly reviewing the work of the internal audit. And external auditor, they should remain alert to the risk. What is the risk? That internal auditor might not be objective, he might not be competent, right? So these are some risks that external auditor should be alert. Next, service organizations. When the entity is taking the help of service organizations. Okay. Therefore, auditors need to obtain an understanding of the service organization also. For example, what is the nature of the service that is provided? What is the relationship with the client? What is the materiality of the transaction? Is it very material? The transactions with the service organizations. Auditor need to check this. Okay, because this could be a source of a risk of material misstatement. Materially, it could be misstated. So how are you going to obtain an understanding of service organizations? Inquire with the client. You directly ask the client. What is the services they are receiving? What is the nature of that services? What is the relationship with the client? Number 2, confirm from the service organizations and their auditors. And their auditors means the service organizations auditors. You are the auditor for your client, but your client is using a service organization. For them, the auditor is different. So you have to confirm with both the service organization as well as their auditor. That is a second way through which you can obtain an understanding of the service organization. Number 3, visit. You can have a visit to the service organization. Type 1 or type 2 report from service organization auditors. Okay. If control are expected to operate effectively, that means controls are working properly, then obtain a type 2 report. Okay. So type 2 reports are obtained when your controls are working effectively. Then you need to perform a test of control at the service organization, not in the entity, not in your client's firm, in the service organization where your client is dealing with. There you are performing the test of control. Do they have the are their control working effectively or not, right, in the service organization? Then use another auditor to perform test of control. When you're performing that test of control, not the same auditor, use another auditor. One auditor will be performing test of control at the service organization, another auditor will be performing test in the test of control, okay, in the client company. Reporting, how do you report? You need to modify the auditor's opinion if sufficient appropriate evidence has not been obtained. Remember, modify, that means change. Second, use of the service organization or the auditor is not mentioned in the report. When you are using the service organization or even their work of their auditor, you cannot mention it in your report. So from your exams point of view, you need to go through these questions from your revision kit. From section A, Hemsworth and Delphic, and for section B, Lely window clause. So that's it for today. See you tomorrow in day 8 with system and control. We are going to cover internal controls and all. So thank you for watching and see you tomorrow.